Hi everyone. Hi everyone, and thanks for joining the channel and joining me in that accounting course. I understand today is a holiday. You want to spend time with kids, so probably not much people will join the Q&A today, and we will do a quick recap of the lectures. As well, we will somehow repeat more or less that material on the next module, since I see many people missed the boat today. So let's begin. Let's start with a schedule to see what we had in the morning. Where is my schedule? It should be here in a course folder. So for today, we had soft skills with accounting resume and curriculum vitae. We also had a bit studying of the income statement and accrual basis. Then we moved to looking into accrual versus cash basis versus tax accrual and cash basis. And we did some homework on the same subjects as today's lesson. So let's take a look. If you see any video quality problem or any sound quality problem, let me know. I will try to fix that. Okay, let's see what we have here. Where is the homework? Let's start with the homework because it basically covers all our tasks. So homework is in homework public folder, homework 2 instructions, and we have a bit of instruction here. So unfortunately you cannot start doing homework 2 from scratch. You need to do homework 1, homework 0 first. You need to copy the file, and you need to make trial balance and make balance sheet and then make an income statement. And the first point on today's homework is accounting resume, especially if you are new to accounting. So you can review the video which we did in the morning. You can read an article from Harvard Business Review which has tips on accounting, and especially pay attention to the tip which they give you about not restricting work experience to work. So basically what that means is that even if you do not have any employment in accounting or bookkeeping role, you still can figure out how to get an experience. Like you can go work to charity, you can go work to HOA association. If possible, you can ask your network. Maybe you can agree with some other bookkeeper or accountant on your network to kind of provide them some support or admin services. Or you can just really practice something during that course or during any other course. That's all practice. That's all experience. And as I have shown you in that file, it's the same approach as with transactions file. So basically, what I want you to do for that homework is to try to describe one piece of your most relevant experience. And I want you to show, so here is a header, relevant experience. Here is a subheader. I put that course here, but you can also put whatever experience you've had with your previous employment or maybe on the other course. And now I put a list of priorities here. I put a list of priorities here. Let me make them kind of red. And that is something I want you to mention. And if you look into a Harvard Business Review article, you will also see that. And I also want you not only to mention priorities or impacts, but also figure out the quantitative measurement of such impacts. Let's see if I have my resume open. Just give me a second, I will open that. So that's my resume, and here I have my most recent experience. And if you take a closer look here, for many statements, I tried to put up some numerical achievement. Like it's mostly about cost savings, but you might have figured out something else. Let's get back here. And if you go look into Harvard Business Review article or the book I referenced in the study materials, you will find out that the most important thing for your potential employer is revenue metrics or profit metrics. There is also a cost metrics like a cost savings. And there is also some productivity network when you come up with some template or some invention to save time for everyone or for yourself on the work. If you optimize something which saved hours, of course you can get a monetary measurement for it, but you can also mention if it kind of saved hours. And the second step here, let's see. So review the video, review the article, create a copy of the file. Okay, we have that file here. And we have another file. It's in the module 2, in the soft skills, list of requirements to junior accountant or junior bookkeeper. And if you see, that's where I just copied a bunch of positions requirements for entry-level positions. And if you just start from the top, you can see that, okay, record, bank, deposits, and application of accounts receivable. And you might question, how can I do that? How do I record all of that? And we can practice that in two ways. First one, we realize when we practice the transactions. Let me see. Yeah, here it is. When we practice transactions and we sold something on credit and then we received cash, we basically figure out what the entry for such transaction will be. Let's just copy it here. And let's go to transaction list. Okay, let's start from scratch. Record bank's allocation. So first of all, we sold something. Accounts, so we come up with accounts receivable. Let me see how I call my account on the trial balance. Accounts receivable trade. And here we have, for that part, we will have revenue products. Okay. So we sold something, let's say for $5,000. And credit revenue. First part. And then they want us record bank deposits. So basically we received cash from accounts receivable from our customer. So we record cash and we credit. What do we credit? Accounts receivable. So debit cash, credit accounts receivable. All right, but that's not enough. Let's see. We go to the Quickbooks and we sign in. We need to sign in to Quickbooks Online Accountant. Okay. Okay. So we signed in and now we want to practice that transaction in Quickbooks. To do that, we go to Overview. That will be overview of our internal books. And we click New. We have customers. So first, to make a sale to customer on credit, to have an accounts receivable, we do that in Quickbooks through invoice. So we click invoice. I don't have a customer here. I just create new customer. I call him customer 1. There is a bunch of details here. Let's say it's net 30. Let's say it was September 30. Due date October 30. Okay. Product and service. I already have kind of merchandise one, but I will just say sales. Okay. Description, quantity, rate, amount. So let's say we just sold 5,000. 5,000. We can add a bunch of details here, but I will skip that at that point, and I will click save. I don't click save and send because we do not have customer email, or I can add no, not really. I don't want to do that right now. I could have added a course email here and just see if it comes to my course. So we basically recorded that amount, invoice 101. We did very small amount of details here. So let's see if it's got reflected on our reports. Sales, invoices. So I went to sales and then to invoices. And let's see, it's here. It's due today. And we can receive payment here. Let's see what we can do. Void receive payment. Customer 1. Okay, we already selected that 5,000 and save and close. So basically here is the payment details. The only thing I will change, payment date, September 30. Yeah, assuming it was paid in September. Save and close. So basically it now has a status deposited. So we basically received cash for that invoice. Let's see what we have in our reports. Sales, all sales. So we have invoice from customer and invoices paid, and we have payment for customer and payment is closed. So basically we reflected everything. The only thing that we might be missing here is receiving payments when our Quickbooks is integrated with bank, with online bank. So mine is not integrated. Maybe on one of the next lessons I will try to upload some random statement from the checking account and see what I can do with that. But so far we practiced, and for that part of the task, we can we can go here in our working file and we can say that so here is a header, running accounting and bookkeeping for small business as a practical course, as a part of practical course I was taking. And here we have that recording bank deposits and applications of accounts receivable and Quickbooks. That's done. We can do a lot. If we want to do a lot, we can say we do like 10 such operation in a week. That's just because generally recruiters like some metrics, and the more you practice, the bigger the number you can put here, the more attractive it will look. So whatever we're doing with that is just has a purpose to make your resume, give your resume higher chances to pass algorithmic review or recruiter review, because both algorithmic review just looks for the keywords and recruiter review just looks for the keywords too, and recruiter generally spends something like 7 to 10 seconds on the resume. You can find a bunch of useful information in that Harvard Business Review study. Let me copy that review to your to the chat. If anyone is here, just say hello. So here is this review. Here is the homework instruction. And here is a list of requirements for bookkeeper and accountant. Okay, I see some people are joining. That's good. So that's what I want you to do in the homework. I already did a bit of wording regarding my course. You can pick your previous job or you can pick a course. And the second part of the exercise, you need to select something which you think you will need for your future job from that list. And you need to give it a thought how you can accomplish it within the course. So the part of the course we are doing here is to be able to build your resume. If you have nothing to show on your resume, we will try to build that. Assist with month and year-end close. Prepare and post journal entries. Calculate depreciation. Support annual audit. Prepare bank and credit card reconciliation. Experience with accounting software. Proficiency is Microsoft Excel. Problem-solving skills. Excellent interpersonal skills and ability to work collaboratively. Okay, so with that, we already spent 20 minutes on resume. It's time to move on to the next task. Start posting to Quickbooks. We have a video here, and I probably need to add a link. I need to add a link to instruction to open a free Quickbooks account. Okay, done. So we did a review how to make postings. Okay, let's see what we have on the plan here. post owner's investment. For that, you go to the new bank deposit, and for account, select owner's investment. Let's see here. So we add new other bank deposit. We put money in cash on hand, September 30, received from, so account. And for account, we put owner investment. Description, payment, and we put 100K. It's probably the third time for today I am investing 100K in something. Save. So Quickbooks has a bunch of various different details, received from, description. In a real world, you want to put some comments and record that as much as possible. In the practice, we kind of a bit skip all those details. Okay, so that one is done. We posted owner's investment. Post building acquisition with cash and mortgage via journal entry. That one is interesting. I did that through a journal entry, but we probably can post it somehow in a different way. So I put a journal entry. Okay, so I selected an account building. Buildings. And I put, so here is our file with transactions. I started on the top, but you can pick whatever you want. I picked up buildings, 200,000 cash, 50,000 mortgage, 150,000. Okay, so 200,000 buildings, debit. Okay, then cash. I have here cash on hand 1, 50,000. And I have non-current mortgage here because I have already added it here. Let's add everything to the current mortgage. Account type. Let's see. Other current liabilities. Name. Current mortgage. Let's see. Loan payable. Yeah, it's probably loan payable. Current mortgage. Save and close. Current mortgage, 150K. Okay, we can put descriptions here. We can copy transaction text here. Or we can leave it blank for the practice purposes. Save. Close. Let's see how our transactions were reflected. Let's go to reports. Let's go to cash flow. What do we have here for cash flow? We have some bill due. Okay. Expenses. Payroll, time, budgets, reports. Okay, let's go to reports. And let's go to balance sheet. What we did impacted mostly balance sheet accounts. Okay. Buildings, 400,000. We can click on that number and it will show us two transactions. One I did in the morning and the other one I did later today. So we have two transactions for the buildings for 200K. Let's see if I can pick up. Yeah, if I click on a journal entry, I will be able to see what the transaction was. So basically all of that has posted to the balance sheet. Let's return to the balance sheet. Okay. So QuickBooks makes balance sheet automatically, and it kind of sum-ifs all the entries you do into your balance sheet. Okay, so we did that part. Now, let me see if anyone is on the stream. Yeah, I have a couple of people, that's great. Usually we have like 7-8 people, but 2 is okay, taking into account it's a holiday today. Let's see what we have for the homework. Where is my file? Okay. So we posted building acquisition. Now we need to post inventory acquisition. How we are going to do that? So first, we need to establish an inventory item in QuickBooks. That can be done by sales, products and services, enable inventory, and then we need to add inventory. I've already enabled inventory here, so I will have it. Let's see, where is the sales, products and services, and okay, or what? Products and services. So I cannot show you a picture which was there when I enabled inventory, but basically in here you will have inventory section, and it will say that you need to enable inventory. And I also created one inventory here, and let's see if I can add another inventory. Oh, it was looking like that, and inventory was disabled, and you need to enable it first, and then you can click to add inventory. And the name will be merchandise 2. You can enter SKU number here. You can enter initial quality on hand. I will say it will be 0 as of the date, September 30. No, it doesn't allow me to do September 30 for some reason. Oh, a reorder point. So later, when you progress in your career, you will figure out what these items are. Right now, it will be just an overload for your memory. Inventory asset account. So it's inventory merchandise. I also created that. You might want to add some new account. Description, sale price. So I left everything blank. So we do save and close. So let's see how we moved. We established an inventory item in QuickBooks. Then we need to purchase some quantity of the inventory item we've just established. And we do through new transaction plus new and bill. So plus new is here and bill is under vendors. And that will be vendor. Let's say it's a merchandise vendor. Everything is here. The only difference is that we need to kind of select what type of merchandise. So it showed me up my previous purchase, but I want to change that. I want to buy merchandise too, and I want to buy 100 items. Let's make 1,000 items at $5 per item. It calculated the amount. Please note that I did that through item details, and I entered the quantity. That's important because when we do a sale and we calculate how much items did we sold, that stuff, that quantity here will help QuickBooks to figure out your cost of sales. Let's save it. Okay, when you do a bill, you basically kind of send invoice to your customer. And that doesn't mean that cash is recorded if you paid cash. So you need to pay that bill with a cash. Let's see if I put that into homework instruction. Purchase, imaginary vendor, you create a price, inventory price. Okay, let's do 2.5. Pay the bill for inventory you've just purchased. How you can pay the bill? It's the same. You use almost the same approach as with a bill issue. You kind of click new, you kind of click pay bills. And let's see what we have here. Credit applied, not available. Payment, 5,000. So that was a bill for 5,000 and we have received payment for 5,000. Sorry, we paid 5,000. We paid 5,000 to the vendor. And I click save and close. Let's now see, so what do I have in expenses? Okay, I have this inventory merchandise bill and I have a bill payment check, 5,000. I don't know if I actually can change that. Oops. Yeah, something happened. Okay, I need to close that. And let's go back to expenses. And we see all the details here. So let's see details of that transaction. Okay, so it's here. And it's not really clear how did we pay that. So that defaulted to the check. It could also have been ACH or something else. But okay, check, so be it check. Okay, so how did we pay bills? Let me update it here. So basically we're done a bit of practice in QuickBooks. For that reason, you can practice more. I mean, you definitely, if you are just starting out with accounting, you need to practice more QuickBooks transactions. And for that purpose, you just come up with transactions, and then if you are not sure how to do that transaction properly, you just book it with the help of Google. You Google and you find guidance and you book it. Similarly, at some stage we will want to connect a bank account here, or maybe we will want to connect a bill pay here. So QuickBooks has functionality to pay bills. Let's see what that is. If I go to pay bills and I enter 10,000 here, I can schedule payments online. And I can pick bank account or credit card or debit card. And with that, I can actually kind of pay. Of course, I will not be entering any details here. So we did short practice on QuickBooks. Where is my homework? We did short practice with QuickBooks. And now our task will be IRS publications, but let's let's just jump to the fourth task because it's kind of easier one. Create an income statement with sum if. We already did a similar task, which was create a balance sheet. Now we are creating income statement. In my example, so you just add in your working file, you add a tab for an income statement. You can copy template from here with revenue products and revenue services and cost of sales, cost of products, cost of services, margin calculation, operating expenses, and you build it based on your transactions. I actually used some template from Apple, so these are Apple financials, and I build it similarly. Alternatively, you can go to financial statement preparation guide, and you go to page 22, income statement, and you take a look at the template here, and you can get your headers and subtotals from here. That should be an easy task for you since you've already done trial balance and balance sheet. Let's see. Okay. So we have trial balance here. This is my trial balance. Oh, it doesn't balance now, but I will fix that. So here I have income and expense accounts, and those accounts are mapped in balance sheet. They are mapped to retained earnings, and in income statement they are mapped to revenue products, revenue services, cost of services, cost of products, and SG&A. So far it's SG&A, but we can add some ideas here. What accounts do we want to see? Let's say we will definitely see depreciation expense when we move to depreciation. So I will just put it here as kind of a reminder, depreciation expense. Let's see what else do we got here. Other operating. I don't think there is something other not included in SG&A. Provision, impairment loss. Interest and amortization of debt, discount and expenses. But let us just call it an interest expense. With these two, it's probably enough to build kind of interesting P&L, interesting income statement. So I think you will be able to figure that out. Let me add one more task, 5, if I have not already done so. Continue. Continue to do your own entries, your own transactions, and try to use a new accounts. Okay. Now let's move to IRS Publication 53553. For that part, I want you to create a memo, accounting memo, regarding different treatment of these accounts, which I listed here. Prepayments, cash revenue, revenue on account, prepaid expense for services, cash payment for services. And I provided you with an example here. I called it accounting memo. I also entered a line who can use tax basis. So basically we can put that information here. Let's look on prepaid revenue now. I did an analysis for prepaid expenses for services for the tax accounting cash basis. To take a look back, let's take a look back about cash basis and accrual basis. Here in my homework on transactions list, I added 3 columns. So I have now 4 columns with different amounts. The first one is accounting and accrual basis. The second one is cash basis, but still accounting. The third one is tax basis, tax accounting with cash basis. And the first one is tax accounting with accrual basis. And what we want to see here is to see how different transactions are treated under different accounting methods and tax methods. So for example, the equity investment is treated equally under every method out of 4. And mortgage, buying a building with a mortgage, is mostly treated the same, except for in cash basis accounting, it will be just cash outflow. So cash basis of accounting treats every transaction only in a way it impacts cash account. And if transaction doesn't impact cash account, like here we reclassed the mortgage from current to non-current, no impact on cash, and that transaction is simply ignored under the cash basis of accounting. And I would say it's the least priority for your accounting. It's the lowest priority in your accounting. Okay, so now let's see what we have. For inventory and merchandise. And that's interesting because even though that cash is impacted and in cash accounting it's an expense when we bought the inventory, in taxation you will still recognize the inventory on your balance sheet. But I will investigate that further on the next module. Let's see, and equipment. So these are basically the different bases. The accrual basis is the one which deals with accounts receivable, with recognizing revenue when the revenue is earned, and recognizing an expense when expense is incurred, but not when revenue is paid or expense is paid. And cash accounting recognizes everything when the cash changes hands. Okay. So now let's go back to the summary. It's on accounting memo. So to work in that summary, let me add a link here to IRS Publications. Okay. IRS publications, and out of all those publications so far we just need 38 accounting periods and methods, and we need 35 business expenses. Accounting periods and methods is a smaller one, and let's see what we want to investigate here. Let's see, we can figure out treatment for prepaid expenses. And we want to do that for cash accounting, so I already copied it here, and let's do that for accrual accounting. So I go to that publication, I go to accrual method, page 10. And I look, okay, we have income here. Mostly they say that you recognize income. It is earned. You recognize income under accrual method in the year when it is earned. Estimated income, change in payments, advance payments. Okay, so that's for income, but we want to look at prepaid expenses. Expense. Compensation for services, vacation, exception for recurring items, amended return, inventories. Okay, expenses paid in advance. An expense you pay in advance is deductible only in the year to which it applies, unless the expense qualifies for the 12 months rule. Under the 12 months rule, a taxpayer is not required to capitalize amount paid to create certain rights or benefits for the taxpayer that do not extend beyond the earlier or the following 12 months. So basically, when you make a prepayment and that prepayment is less than 12 months after the right or benefit begins and the end of the tax year, so that prepayment should fit to the next tax year, and that prepayment should be for the less than 12 months. In that case, even if you are under an accrual basis, you still can deduct your prepayment on your taxes in the year when you actually paid it. So I add this wording here, expense paid in advance. Okay. And basically, I also have two questions here. Which method will defer income and which method will accelerate income? So basically, we can defer income Basically, you can defer income under both methods. With 12 months rule. And you actually can accelerate income with both methods too. It depends whatever strategy you need to implement, either to accelerate your profit or to defer your profit. Okay, let's move on to which method allows more manipulation. They both offer you some manipulation opportunities with your taxable income, and it's totally legal tax manipulation. Let's see what we have on prepaid revenue. Let's go back here and see advance payment for sales. Special rules apply to including income from advance payment or agreements for future sales. Okay, sorry, let's get back here. Generally, you report an advance payment for goods, services, or other items as income. I probably need to zoom in a bit here. So they say that even though we kind of call it an accrual basis, generally you report advances as income in the year you receive the payment. However, if you use an accrual method of accounting, you can elect to postpone including the advance payment in income until the next year. However, you cannot postpone including any payment beyond that tax year. For this purpose, advance payment must be includable in gross receipts under the method of accounting you use for tax purposes and included in income in your applicable financial statements. Okay, so prepaid, we have prepaids here, and we have just looked into the accrual method. So what they say that generally if you receive a prepaid revenue, prepayment, even though you under tax accounting accrual method, generally you need to add that to the receipts, to taxable income. But however, if you use an accrual method of accounting, you can elect to postpone, including you can postpone that advance payment, including that advance payment in income until the next year. However, you cannot postpone that beyond that year. So basically, if you got more than 1 year of prepayments and you will not utilize that prepayment, you will have to kind of pay taxes on it. You will have to include it in your taxable income. But if you use an accrual basis of accounting and you got a prepayment, you have a possibility to include that into the tax period when you actually got the revenue for that prepayment. However, there is an interesting part which gives you some conditions that prepayment should be includable in the gross receipts under the method of accounting you use for tax purposes and included in income in your applicable financial statements. Described in section 5B1. Let's take a quick look at that section. So yeah, basically they give you an exception. So the financial statement requirement is not applicable to that case. Okay, so here is some additional information which might be important here. So basically they say that overall it's up to you to so generally you say that you include advance payments into your revenue into your taxable income, not later than for financial accounting purposes. So we research that part for advance payments, and we can go back cash method income, constructive receipt. Under the cash method, you include in your gross income all items of income you actually and constructively received during the year. Okay, so you can include that constructive receipt, your calendar year taxpayer, you bank credit and made available interest. Okay, expense based in advance, exceptions. Okay, they are not describing advance payment here separately, but they provide you with a general rule which says that if you received cash in your bank, particularly for prepaid revenue, you need to pay taxes on it. Which method will defer income? Accrual method might defer income. Which method can accelerate income? Accrual. Cash method will accelerate, but accrual can too. If you remember, they said that generally, if you receive an advance payment for revenue, you might want to classify that into the current taxable income, into the current taxable income in the current year. So that's accrual method gives us more leverage in manipulation here, because we can choose both options under accrual method: to pay taxes on that revenue in that year or to postpone taxes. So that way, first, I want you to complete the memo for remaining stuff, and I want you to kind of try to rephrase or at least understand for yourself what transactions mean what. And let's debit cash, credit payment. I will later add the debits and credits for these transactions. Okay, have you got any questions so far? If not, it's the last chance to ask a question, and I will be concluding today's Q&A with that. We practice quite a bit today. We looked into accounting resume and CV, and we did some posting to Quickbooks, and we discussed income statement a bit, and we spent rest of the time looking into IRS publications and working on some accounting memo. The idea of that accounting memo exercise is to make you able to do your own research and to try to understand the difficult verbiage of IRS documents, even though it's already processed. So this is not a law that's already processed part of the law. The law itself, it looks like that. Let's see what they have here. They just have a huge amount of data here, and it's just endless text, and it's not really structured, and that's that's been edited for many years. So even though that document is not very readable too and easy to understand, that's probably the best what's available. Okay, I see there is no questions. Let's see if I got any questions from someone to my Q&A document. I forgot to check it today. Let's see, Q&A, ask your questions. No new questions. I think I asked many of these. Okay. Thank you for joining. Have a wonderful weekend and bye bye.